Maverick Traders, welcome out to your market roundup for September 8th. Corey here with you. We're going to take you through meaningful news in the markets. We're going to talk about what sectors are heating up, which are cooling off. We're going to highlight some bullish, bearish, even neutral ideas. Whatever stands out, we will highlight it as a trade setup.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick Traders received this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
So as we look at markets coming in, it was not a super volatile day by any means, but markets continue with what they've been doing, which is a slow grind to the upside. Dow, S&P, Nasdaq, Russell, all slightly higher. Oil and gold up as well. Nothing super robust. Certainly gold is the outperformer. On the daily news, the rate cut expectations are in full effect. Pricing in a 96% probability. Wall Street is now saying there's probably going to be multiple cuts before 2025 comes to an end on the back of Friday's worse than expected jobs number. Advanced decline line about 50-50, stocks advancing and declining. Again, it was a quiet day. 50-period moving average still slightly more stocks, 58%, trending above the 50 MA. As we look at the S&P chart, we're in a series of higher highs and higher lows, and that's what an uptrend does, right? You make a higher peak. When you pull back, the low is higher than the one before it. Notice this peak is higher than the one before, higher low than the one before. The next peak is higher than the one before it. The next low is higher than the one before it, and away we go. Now, we're not robustly rallying, but we are grinding our way to the upside in this series. The first real trend change signal would be for these pivots to stop going higher. So if you were to draw it out, the peaks and the valleys, and then whoops, maybe we come down and break a prior pivot low, right? If this market were to surge down and break this prior pivot low, you would have problems. It would also be confirmed by a break of the 50 period. You'd be below those, and you'd have a real trend change in effect. But we are not there, my friends. We are still in that marching series higher of higher highs, higher lows. We don't want to really outguess ourselves and get too smart for our own good. This is just an upward trend. The Nasdaq a little bit more flattened, a little bit more ascending triangular type of pattern. We haven't broken above the prior highs for at least a month or so, but we're not going down either. We're just stuck in a range in the Nasdaq. As we look at the heat map, you know, it's a bit of a mixed bag here. You had T-Mobile with a big drop. You had Pepsi and some of these names with a big drop. Pepsi is going through some corporate structuring changes and so forth. CVS with a big drop. You can see it's more in that like defensive posturing. Telecom and consumer defensive and healthcare names really underperforming. What continues to outperform are, first of all, the more important, the bigger size stocks within the S&P 500, more in the green, the smaller stocks more in the red, and this has been an ongoing theme. Certainly software was the outperforming group today. Let's look at a few different names here. We've got a robust list of possible bulls, possible bears. Let's take a look at a few charts. We're going to start with a financial. Bank of America has pulled back in the last few trading sessions. This is just a standard bull pullback. Really the proper characteristics of pulling back and using some old resistance as new support, pulling back to the moving averages, the mean reversion area, and then as we pull back, sort of a bullish candlestick reversal, the long lower shadow hammer-like candle. Bank of America is probably going to at least attempt an upward rally here, so a standard bull pullback setup. We have Valero. This one is a little bit more high basing, and Between the two, this is actually the stronger of the two patterns. You can see similar characteristics. Are we in a strong upward phase? Yes. You can see the moving average bullish crossover, the upward slope that's happening. But the reason this is even more powerful is think about going up a lot, and then there's not even enough selling pressure for a real mean reversion. There's not even enough sellers to get us back to the moving averages. It really signals how strong this is, and usually these stocks continue to burst higher. So a good example of one giving some ground, one not even giving ground, and the one that's not giving any ground is probably the one that has the most upside potential. So if you were playing for something to have an aggressive upside target, it would be Valero. If you wanted something that's just a more standard target, the first name in Bank of America could be a candidate. CEG, Constellation Energy, in the utility group, you can see the downward trend that we've been in. We recently just bounced and away we're going to the downside. So series of lower peaks and lower valleys and so forth. We're just in that continued downward phase. So don't overthink it. CEG, we want to continue to play lower. Coca-Cola, another name we talked about. Pepsi had a rough day. Well, Coke broke some support levels today and did so. You can see the moving averages rolling over and such. KO is the symbol, and it got KO'd. Probably going to continue to trade down into the mid to lower 60s. Coke is not a high beta name, so you're not targeting this stock to go down 10 or 20 points, but a move down to 63, 62, something like that, certainly in play in Coca-Cola. So markets are still in that upward trending phase. There is the possibility that we stop the quiet rally and we start to go into the exhaustion phase. So usually in an exhaustion phase, it'll actually speed up on the upside. You'll go from this grind and you'll just get really extreme, kind of parabolic. And if it does that, that would be a sign that we're in a stage 4 exhaustion, and that would be probably the peak in the market. But before we get to that point, there'd be a nice big rally mixed in. So maybe the markets often do that. They'll put kind of a big exclamation point at the end of a run. Maybe the market will scream higher and put that exclamation point on this rally. CPI comes out on Thursday. Earnings season is winding down, but you've got Adobe and Oracle, a couple of big tech names they're reporting this week. Hope you enjoyed today's market roundup. Have a great week, everyone. We'll see you next time.